We're going to go to another critically important story in terms of policy here in the United States, and that's tax policy and some of the dodgy things going on with it. We are very honored to be joined as we continue the show by Matthew Gardner, who's a senior fellow at the Institution on Taxation and Economic Policy, ITEP. Mr. Gardner, thank you so much for being with us.
Thanks for having me.
Well, we were very happy to have you. You were one of the authors of a very interesting new report, June 29th. Corporations reap billions in tax breaks under bonus depreciation. Now, most people hear bonus depreciation, it's like, what could that possibly be? But you have laid out exactly what it's being used for and what it is. But maybe just give us a sense, how much money are these corporations able to avoid paying in taxes because of this? Maybe first off, and then what is bonus depreciation?
So the headline finding from us from our new report is that in the first 5 years of the Trump corporate tax laws, 2018 to 2022, just 25 of the very largest and most profitable corporations have collectively saved $67 billion in taxes through accelerated depreciation, through this one feature of our corporate tax law. We are measuring this 5-year period because it was the Trump tax cuts of 2017 that introduced this feature. And what bonus depreciation is the idea is this. If you're a company and you buy a piece of machinery, you're supposed to be able to write off the cost of that machinery during its productive life. So maybe you got like a machine that lasts 20 years. Well, you're supposed to be able to use that cost gradually to reduce your income in sort of a linear way over that period. Accelerated depreciation, which has been around in some form or another for a few decades now, lets you write off these costs faster. Immediate expensing, which is what's in effect right now as a result of the Trump tax cuts, lets these companies write off the whole thing immediately in year one. A huge immediate tax savings for any company that buys any capital equipment, invests in anything long term. And so the two things we know are that the benefits from this tax break are hugely concentrated in the hands of just a very small number of the biggest, most profitable corporations, and that by and large, the tax breaks these companies are getting, again, 67 billion for just 25 companies, are by and large basically being given to these companies not as a way of changing their behavior, but for rewarding them for what they were going to do in the first place, right? We know that you can't, if you're a manufacturer, you need manufacturing equipment to do what you do. Any of these businesses, whether it's utilities or tech companies, they're making these investments because they have to stay in business. And so the notion that they wouldn't do it if we didn't give them money to do so is ludicrous on its face.
Yeah, and so you guys find in this report that that this comes out to about these companies started paying an effective federal corporate tax rate of 12.2% since 2018, under what you just described, which is below the statutory rate of 21%. So I mean, they're basically just like getting out of paying. I mean, these aren't like little companies. These are big companies. We're talking Verizon, Amazon, Disney. There's already so many tax loopholes these companies get out of, as just to start off with. And then of course, like, you compare this to the average person, especially like working people or even working poor people who, like, when they apply for the child tax credit, sometimes they like don't even get it, or they end up getting audited as a result, whereas these companies get away with all this. So it really is outrageous. I'm just laying all that out because it's like, when you look at that number, it's just like the unfairness of it all really strikes you. But that said, your report also says that this policy is set to wind down starting this year, but would or could be extended. Can you explain what that means? Like, is this going to be extended? Or is there a bipartisan like split on this policy, or does everybody support it?
Sure. Well, yeah, the reason we're talking about this right now is that while between 2018 and 2022, companies could take advantage of this full expensing, starting in 23 and ending in 2026, the benefit of full expensing is scheduled to gradually go away. And I think it's fair to say that the Republicans in Congress and President Trump, when they enacted this, never intended for this phase out to take effect. The point was to do it permanently while making it appear less expensive than it was. This is a trick that Congress has been playing repeatedly on us, especially from the Republican side, since the Bush administration did it in 2001. You try to fit 2 pounds of sugar in a 1 pound bag by passing a permanent tax cut, but making it magically disappear after 10 years. Well, and the expectation is that after 10 years, Congress isn't going to allow taxes to go up dramatically, which is the way they'll describe it. So they'll continue this. So I think the expectation, certainly on the Republican side, is that this really is a permanent tax cut that just needs to be made so. There's more resistance on the side of Democrats. Sensibly, Democrats in both houses have pointed to the far more pressing needs, like the child tax credit expansion that you mentioned a moment ago. And of course, deficit reduction, which Republican lawmakers have said they want to prioritize, is a casualty of this as well. So, Democrats are identifying other things they'd rather do. But I think it's fair to say that I think it's a fair criticism to say that there is too little skepticism on either side of the political spectrum among lawmakers towards this idea that big multinational corporations absolutely have to be given these incentives to engage in capital investment, or else they just won't do it. We've been way, way too believing. I think we as a nation, and certainly Congress as a set of lawmakers, when companies make these veiled threats that they'll leave or stop manufacturing things if we don't give them tax breaks. And this is a case where I think both sides of the legislature really need to develop a little bit of skepticism and ask, are we really getting anything for our money when we do these tax breaks?
I think it's a crucial question on so many different fronts. And another issue in this that's in your report that I thought was really interesting, obviously inflation is affecting, the average working family massively right now. We're all dealing with it. But one of the things you all outlined is how the way these tax breaks are structured, in a way, big corporations can, to a degree, use inflation to their advantage to some degree. Could you explain that aspect?
How they can use inflation to their advantage. Sorry, I might have missed that point.
No, sorry. How is sort of by deferring a tax payment.
Sorry. Sorry.
No, you're good.
So to some extent, because with depreciation, you're obviously allowed to write the cost of this machinery off over time, and companies are instead writing them off immediately. That is the main benefit of this. These companies are getting a tax break now that in theory they would be able to get eventually. But the time value of money is so great, and that these companies are very much in favor of this right now. And in particular, for companies like Verizon or Amazon in particular, for whom making capital investments, it's just so central to the way they do business, certainly for the big utilities. They can keep piling these depreciation tax breaks on top of each other. And as a result, just the act of accelerating the tax breaks is providing them in inflation-adjusted terms with much bigger tax breaks than they would otherwise get. So yeah, inflation is definitely these companies' friend. But I think even leaving that aside, the real question is, why do we need to give tax breaks of this side at all? Forget about the timing. We need to reevaluate why we're spending so much of our budget, and we are spending money, we just don't count it that way, in reducing corporate income taxes like this. As I said, I think we've just been giving these companies way too much deference when they say they absolutely must have these things.
Mm-hmm.
Is there is there lobbying happening behind the scenes, or is this just kind of like a natural inclination of Republicans in Congress? I mean, I would imagine if I was a company, I was saving this much on having to pay taxes, I would spend a little money to make sure it continued.
Yeah. Certainly there's been, since the day after the 2017 tax cuts were signed, the lobbying has been going on behind the scenes to make these tax cuts, which were on their face temporary, into permanent tax cuts. We know that started like January 1st of 2018. And, to their credit, the business lobbyists who are engaging in this they're very good at their job. More often than not, they've been able to scare lawmakers into believing that if they don't get these things, the sky is going to fall. And while they're not doing it in public, we know that we know from the work of campaign finance outfits like Common Cause and Public Campaign that these companies and the lobbies that represent them are spending a phenomenal amount of money and time working behind the scenes to get these things done. And of course, the downside is that there simply isn't as much money or as much lobbying power lined up behind the sensible questions one might ask about, can we really afford these things? What are the alternatives? What are the alternative things we could be doing with this money as a nation, other than giving companies tax breaks for doing what they're probably going to do anyway? But yeah, no question, this has been a big, big topic of behind the scenes discussion on Capitol Hill for about 5 years now.
Mm-hmm. Well, before we let you go, let folks know where they can find this report and the other work coming from ITEP. You guys produce a lot of great reports on tax policy.
Sure. Our website is www.itep.org. That's ITEP.org. And we tweet at ITEP Tweets on Twitter.
Easy to find. Matthew Gardner, Senior Fellow at the Institute on Taxation and Economic Policy. Thanks so much for giving us some of your time here in the Freedom Side.
Thank you.